Good afternoon. My name is Caleb Roberts. I'm a junior finance major from McDonough, Georgia.
Good afternoon. My name is Drew Talley. I'm a senior business finance major, combined computer science from Mitchell, Maryland.
Good afternoon. My name is Frederick Slaughter II. I'm a junior finance major from Atlanta, Georgia.
Good afternoon. My name is Jonathan Wade, senior business finance major from Brooklyn, New York.
We are the Wolves of Wall Street, and today we'll be going over our portfolio for week six. I'll start it off by going over our top five. Right now, we have PayPal, Apple, Comcast, Accenture, and Amazon as our top five. What they're making for us, PayPal is making $900,000. Apple is making $823,000. Comcast is at $313,000. Accenture is at $209,000, and Amazon is at $172,000. Couple things that we think about, or just to go over a couple things on why we think some of these stocks are making so much money for us right now. Apple, we had bought them at $173, and that was in the very beginning of this competition. They have since then increased about $16, $17 for us, and even though they took a hit last week, on Friday they dropped about $10 last Friday. We still saw a profit, and it was still a real sizable profit for us, and it kept them still at our top gaining stock. This past week, Accenture actually broke into the top five, and that was actually on Thursday, right after they released their second quarter earnings. A little breakdown from that: they had a 7% increase of their income, a 5% increase of their revenue, and a 10% increase on their dividends earned. So stockholders saw that, and they quickly rushed to buy more stocks of Accenture, which drove up their price about $8, giving us a return of, since we bought into Accenture before their earnings, we saw a 8.63% return on our investment. And then PayPal, reason why they're actually one of our number one, they have been keeping up with their competitors, Venmo and Cash App, even though they are more modern and more quick on how to get money, PayPal has been making sure that they stay up to date and their technology is on par with everybody else. And with that, I'm done. I'll pass it over to my brother.
My name is Jonathan Wade. So I'm going to talk about the bottom five: Aptiv, Alibaba, Spotify, BB&T, and Sony. Some news that we gathered for those companies was that Aptiv auto parts stock rally in a move being attributed to the acquisition of Wabco Holdings by $2 million. Alibaba acquired Teamvision, a platform for co-worker collaboration similar to Trello and Slack. The Microsoft and Tencent-backed platform had raised about $17 million in private funding. Sony is responding to the smartphone downturn with plans to slash up to half its phone workforce. Shares is sliding in a market expected to decline for the third straight year to less than 1% of the market, about 3% in Zolo. Spotify is down 1.3% market after on initiation at underperformed by Credit Suisse. It's on the low side of the target prices. And BB&T, they're down because of the merge with SunTrust. I noted that these news information has a lot to contribute to why they're at the bottom five. I feel as though the moves that they thought that they were making to better in their company and to bring in more profit weren't their best moves. For that reason, it reflected in our portfolio as being a negative impact to us, being that we invested in these companies because when we first had them, they were doing good in the stock. For example, Sony, being that I guess this week they have the PlayStation or the new system, which is why they're doing good. But last week it was different. So those are my, sentiments on that.
Yeah.
So I'll pass it over. Or you guys want to add anything to that?
Well, good afternoon. My name is Drew Talley. Like my brother said, the two lowest ones from last week and this week were Sony and BBT. So we took it upon ourselves to sell a few shares of each. We see that there's currently still in the bottom, so we're trying to gain a little bit of money back. But we hope to see that after the merger is over, that they will bottom up and even out and start rising again for BB&T, and that Sony will eventually come back, getting more systems as they're having many games for Sony are popping out, like such as a game called Apex, which is played with Sony and Xboxes, which is similar to a game that is like called Fortnite. When Fortnite came out, Sony sales went up because you play it on PlayStation. And it was such a popular game that made people start buying PlayStation because they can play on PlayStations and play with their friends who have Xboxes. So we're feeling that as Apex evolves, it will get some sales for Sony. But the two sales that I would like to talk about are a few trades that we made this week. As one being Lyft, Lyft being the mobile app that allows you to call a vehicle to come take you to any location from A to B. As recently they became a public company or IPO, and we were hoping, so we started to invest, hoping that they would many shares be bought out. We bought the shares when I would say it was like $80 per share, and we bought about 10,000 shares of Lyft. It was predicted that Lyft was going to be valued at $20 billion, and because it just became a public company, and with that info, we thought it would be a great idea to invest, and hopefully that we would get a profit out of investing in Lyft. Sadly, we made a mistake, which we hope will even out. Lyft currently dropped to $68 per share, so we did lose a large amount of money. But after we're believing that this is just the first couple of days, that eventually it will even back out to $80 or higher, and if not, we're gonna wait till it gets really close to the price that we bought, and then pull out of Lyft completely. And I'll pass it on to my brother. I feel like he has more to say.
Again, my name is Frederick Q. Slaughter II. As far as Lyft's concerned, we're definitely going to be monitoring it closely. We are really hopeful. A lot of investors are a little shaky about the whole company because they feel they have a weak competitive moat. But I'm more confident knowing that the CEO and the president have very, very high stakes in the company. So they're going to make some kind of strategy and make some kind of whatever improvements need to be made in order to improve their overall stake in the company. So what I'll be covering today is also the strategy for next week. And of course, what we want to be doing is just continue to diversify our portfolio, And one way we're going to do that this week is through cryptocurrency. We want to start purchasing, looking mainly at USD to United States dollar to Japan yen. So we're looking at that. That's currently on the rise. And another thing we were looking at was bonds. We'll later find we just want to X out the equation. Because bonds are more so a long-term stock, and knowing that we only have a few more weeks left, we want to see really a good return out of the bonds. So we overall see how we're going to waste some money. Also, another thing we want to invest in is biotech, especially in the oncology sector. They have been doing very, very well and consistently well over the past couple of years, just looking at their 5-year stock price. Three top companies we're going to be looking at is Seattle Genetics, Collagen Corp, and Insight Corporations. All these companies are very, very have been successful in their trials lately, which gives us high hopes that they will continue to rise and add value to our portfolio. And another thing that we're looking at closely is the toss-up about the Fed rates. So depending on what the Fed changes the rates to, which has been on talks lately, will definitely have an effect on our overall portfolio. So hopefully, will have an effect on everyone's portfolio. So hopefully they keep it at a consistent rate. The market seems to be pretty good right now. The Dow is down about a little bit, but the Nasdaq is up. So hopefully the Fed, makes the right decision that is in the best interest of investors and U.S. investors. So yeah, that's our overall portfolio. evaluation, and we are the Wolves of Wall Street.
Thank you.
Thank you.